Economic review. As we've been telling you today, the government presented its mid-year economic review, and the key headline coming in is that the government has slashed its GDP growth forecast from the earlier 8 to 8.5% to 7 to 7.5%. While the macroeconomic fundamentals do look better, it is going to be challenging for the government to stick to its fiscal consolidation roadmap. Joining us now with his comments on the mid-year economic review is the former member of the Planning Commission, Saumitra Chaudhuri. Mr. Chaudhuri, appreciate you joining us. You've heard what the mid-year economic review has to say about the state of the economy. It continues to be led by public expenditure and private consumption, but fiscal challenges continue in the light of the recommendations of the 7th Pay Commission and the fact of the nominal GDP shrinking quite significantly. Do you believe that the government will be able to meet its fiscal deficit target of 3.5% next year?
I think this year the fiscal position is actually very comfortable. The tax collections are going to be about 200,000 crores more than what was budgeted. The question is, what about next year? Because this is maybe a one-off growth. But you see, the base goes up. If we have 2 lakh crores over last year's budget estimate, means the starting base for next year is also higher. I think they're just being a bit cautious on 2 accounts. One reason being the 7th Pay Commission, which is about almost 1 lakh crores between the railways and the government put together. The second is, in case oil prices were to inch up again, the subsidy burden might increase. I think they're just being cautious. I think the fiscal deficit target is doable. There hasn't been too much budget, too much disinvestment that might pick up next year. So I think overall, both from the tax side as well as from even the higher expenditure, I think they should be able to maintain their fiscal deficit target. But I think they are just being a bit cautious in case it goes a bit wrong.
Okay, so you're saying that 3.5% on the fiscal deficit front is an achievable number. But let's talk about growth, Mr. Chaudhuri. And while the chief economic advisor said that it's preposterous to believe that the growth numbers are motivated, he did acknowledge the fact that the economy continues to throw out mixed signals at this point in time, and the recovery is not full-fledged, and it is certainly not secular. They have now slashed the growth forecast from the earlier estimate of 8 to 8.5% to 7 to 7.5%. Can we say goodbye to an 8% plus kind of growth trajectory given the domestic compulsions as well as the external environment? Look at where exports are today.
I think there are 2 or 3 different kinds of issues. One is the specific computation of growth. The first 2 quarters averaged around 7.3%. The third quarter is going to be poor because agriculture has a large weight. The Kharif was very bad. So it's probably going to be something around 6.5%, 6.7%. So even if you go back to 7.2, 7.3 in the last quarter, in line with the first half, you still get something like in the low 7% as an average. And I think that's the reason for them taking a realistic call. The second issue is, what about 8 and 8.5%, and what about the balance within the growth rate? I think there is a real problem there. If you look at, for example, corporate numbers, you look at their top line growth, you look at EBITDA, virtually there is, things haven't got worse, but they certainly have not got very much better. As long as corporate profitability doesn't pick up, you're not going to get more investment coming in. Because why should a company take more risk into the balance sheet when the current investments are actually not being very profitable? So I think there is a real squeeze on the private investment side. I mean, purely from the financial part of it, there are other reasons as well. So as they quite correctly said, actually much of the growth that's coming is coming from private consumption and a bit from government expenditure. Now, how do you accelerate that growth path? The only way to accelerate that growth path is to increase private investment. And private investment will increase only when private profitability does, and there is no sign of that happening immediately.
Mr. Chaudhuri, it's always a pleasure speaking with you, sir. Thank you very much for joining us with your assessment of the government's mid-term economic review. That's the former member of the Planning Commission. We've got news.